It's about that time of day again. My name is Joseph. Thursday evening, March the 8th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish with a big spike in channel pattern, and that tells me to focus on buyer failures up around those channel highs tomorrow morning. The S&P is bullish ahead of contract rollover tomorrow, but we're a little too close to the target waiting overhead. And to avoid buying into resistance, my plan is to focus on traps and seller failures for buying opportunities tomorrow morning. Nasdaq is also bullish with a big spike in range pattern tonight. That tells me to focus on failures down below the range or wait for a successful breakout pullback to new highs tomorrow morning. Gold is bearish with a big spike in range pattern as well, and that tells me to look for buyer failures for selling opportunities off the highs of a channel tomorrow morning. And last but not least, the euro is bearish with a strong spike going lower, which gives me just enough information to find resistance levels and good selling opportunities waiting above tomorrow morning. I've got a great newsletter in store for you guys and gals tonight. We got some big strong trends, we got some tiny ranges, we got some big news, and maybe some contract rollover for tomorrow. Before we jump in and put together tomorrow's Friday non-farm Friday strategy, I want to remind you, if you're watching today on YouTube, you can find a detailed description of all the details of this strategy posted right here on my blog at sidewaysmarkets.com. I'll put the link in the description of the YouTube video. If you have any questions about anything covered in this video, please remember you can always post your questions in the comment section below the video. And if you like what you see in tonight's video, please help support this channel by subscribing and hit the bell icon so you get notified every time I post another video. And by the way, if you really want to stay in tune with everything we do here at School of Trade, make sure you head over to Sideways Markets and join our mailing list. I'll shoot you an email anytime something new happens at SOT. Grab that mailing list in the upper left-hand corner here on our blog at Sideways Markets. And again, I'll put all the links in the description of that YouTube video. While you're here, don't forget, I'm always posting exclusive content, charts, links, and updates throughout the week on my social media channels, exclusively for social media. You won't find them anywhere else on my channel. And of course, don't forget, speaking of charts, how easy is this? All the charts from tonight's video, you can have all those charts on your computer for tomorrow, right on the blog where it says click here to download today's charts. Don't wait. Grab those charts and get ready for tomorrow's session. And speaking of tomorrow's session, grab that free pass, upper right-hand corner on the blog at Sideways Markets. Grab that free pass. Come join me as a guest in the trade room. That's right. You don't have to be a member to see what the commotion is all about. Grab that free pass if you're not a member here at School of Trade and come out and join me in the trade room as a guest. And don't forget, any questions, you can always post those questions in the comment section below or hit me up on live support. I'm always standing by to answer all of your questions along the way. Let's jump in. Now we got that out of the way, let's check the schedule for tomorrow. Tomorrow's Friday, March the 9th. Tomorrow we got non-farm Friday. Now, typically the first Friday of the month is going to be non-farm Friday. For some reason, the second day of the month wasn't good enough last Friday, so they pushed it right to this Friday. So tomorrow, Friday, March the 9th, we got the biggest news we get as traders is tomorrow morning at 8:30 a.m. Eastern Time. What this tells you is to be very careful before and after that news comes out. A couple things usually happen. First of all, analysts have known about the estimates of this since Wednesday morning. Okay, so ever since we got that employment report on Wednesday morning, all of the analysts, anyone who's reading these reports, they know that we got a big number on Wednesday, and they're expecting a big number tomorrow morning at 8:30 a.m. Eastern Time. The reason why this is important for you is because most traders already have a plan, or they've already gotten into positions assuming the number comes out pretty remarkable tomorrow morning, right? The number was a pretty good number on Wednesday. They're expecting a pretty good number on Friday morning as well. So a lot of this is already baked into the current price. And a lot of traders are waiting for that confirmation tomorrow, and then they'll participate from there. The reason why this is important is because if the number comes out right as expected, we probably won't get that much movement from the announcement tomorrow morning because most of it's already baked in. But the real action comes if the number tomorrow morning comes outside of expectations, right? Remarkably higher or remarkably lower, preferably remarkably lower. Because then anybody who has already entered into positions thinking they're ahead of the game, they're going to have to renegotiate their position, move some things around, right, and get into different positions after that news comes out. And that's where all hell breaks loose. So really the two scenarios tomorrow, the price comes out pretty much as expected. And if that happens, typically the market will sit and it won't move that well. And you've got to give it 5 or 10 minutes to kind of figure out where it wants to go. But then you've got the other side of the coin, right? News comes out unexpected, right? Either above or below. And because the Wednesday report came out well above, I would say the big reaction tomorrow is going to come if the number tomorrow morning, right, the jobs added, right, the payrolls come in below expectations, because that will really shine a contrast, right, on Wednesday's number. And anybody who's already baked in, anybody who's already in the market, they're going to have to make some plan B, plan C, or plan D decisions, right? So that's when things get crazy, and it will oftentimes be very volatile around that news tomorrow morning. So the moral of the story is, whether the number comes out as expected or it comes out outside of expectations, you're going to want to give it some time after that news comes out, because it will probably either be too slow or too fast to trade. Now, I'll be honest, the last couple of these employment numbers we've seen have been pretty sluggish environments. So don't force it tomorrow. If it doesn't move very quickly, not to worry, right? Give it 5, 10, 15 minutes. Eventually the market will find its mojo and we'll have a great day tomorrow. But give it some time around that news. Now, tomorrow's also a Friday, right? So it's also important that we remember there are two main things you want to be thinking about, right, on a Friday morning. The first one is early in and early out. You know, 11 o'clock Eastern time is a good round number to wrap things up on a Friday morning. The second thing are those prior week levels. Prior week open, prior week high, prior week low, and prior week close. Those levels become magnets tomorrow, and we have quite a few of them on the chart tonight. So while we'll trade our plan tomorrow, we have to make sure we're careful around that 8:30 news. Okay, and then again, don't be surprised if it's a little bit sluggish and we get stuck around those prior week levels if the number comes out within expectations for tomorrow. Okay, last but not least, we've also been talking about contract rollover. As I mentioned last night on the newsletter, we knew that contract rollover was probably going to happen around Thursday or Friday. Right, we didn't get it today, and we're still trading on the same Emini contracts, the March 2018 contracts, which means I'm going to talk about rollover briefly here tonight. But just be aware, right, tomorrow we may be trading on the next front month contract. Right now we're on the 0318 for all the Eminis. Tomorrow morning we may be trading on the 0618 contract. How do you know? Because you'll have more overall volume being traded on the 618. Once that happens, make the move over to the 618 contract. Don't be too concerned if for some reason you forget and you trade the 318 contract tomorrow. There's no real danger there, but it won't be moving very much. The volume will be very low in the 318 contract because all the volume will have rolled forward to the 618. All right, guys, so I know I covered a lot here. Non-farm payrolls for tomorrow, early in, early out. Watch those prior week levels. And, of course, right, we got the contract rollover. And why not just throw one more thing on the plate for tomorrow? It doesn't do tomorrow, right, but it has to do with this weekend. And please don't forget, we got daylight savings time coming Saturday night into Sunday, right? So next week when we come back, right, if you're not in the U.S. or you're not a state in the U.S. that follows daylight savings time, I know I like to make it nice and difficult on us these days, right? But please be aware, right, for the majority of the United States, we'll be springing forward by 1 hour on Saturday night, right, into Sunday, right? So just make sure you adjust that, right? You might want to use Google and make sure you're on the right time for Eastern time if you're not one of those states or if you're outside the U.S. going into next week, just so you know you're on the right track, right, with Eastern Standard Time. All right, guys, let's wrap that up and let's jump into our charts now. Got a lot to cover here. I can see I'm almost 10 minutes now into the video, so I'll make sure to hurry up. I'll keep my bad jokes to myself here tonight. Zing, right? Let's jump in. We got crude oil, we got S&P, we got some gold, we got some euro, and maybe some Nasdaq here too. Starting off tonight on the crude. The black gold is bearish with a spiking channel and possibly a hidden channel setting up for tomorrow's session. The bears have clear control, and this spiking channel tells me the most reliable selling opportunities will likely come up near the highs of the channel, preferably above those prior swings tomorrow morning. Now, the first thing you can see on this chart right now is you can see, yeah, we got that prior week low and prior week close. We're sitting right on that prior week low right now. That's not a huge deal right now, but if we start seeing the market kind of sit and get comfortable around here, then we know we got to be careful and use it as a magnet. At the same time, if the buyers were able to grab hold of this tomorrow, I got a pretty good eye on where I think those buyers are going to want to go up to the closing price from last week. So looking at the chart right now, you can see we had that strong move down. We pull back. We make that new lower low. I'm going to connect those lows, bring them up to the highs, and that creates our spike and channel. At the same time, I'm also connecting the major lows here, bringing it up to that high, and you can see how convenient that midline is setting up for a hidden channel. So let's break this down into two basic components, right? First one is the spike and channel. We have that strong move down, pull back, right, into a lower low. That creates the spike and channel, and we put it up around those highs. Anytime I have a spike and channel, I always know the best trades come above the prior swings. So I'm watching the 60-62. I'm watching that 60-80 area, right, which I, of course, nicknamed my battle zone. So the spike and channel pattern tells me, simply put, get up so I can sell back down. Then we have the larger hidden channel, right? I hope we get a chance to use this tomorrow, right? Connect those lows, bring them up to that high. That brings us in, right, kind of like a hidden level of resistance. At the same time, I mentioned a large channel last night on the newsletter. I hope you guys are watching last night's newsletter because, of course, we came right back to that channel to tap it and drop today. So if you watched last night's newsletter, you were ready to go for that channel off this 30-minute chart. So we also have that large channel, right, coming down here overhead. And that large channel would also give me, right, some selling opportunities off of that high as well. So there's quite a few bigger channels out here. This one's pretty easy to find as well. Line up those lows, up that high. I'd love to be a seller up around the high of that channel. So spiking channel and hidden channel, along with that 30-minute channel as well, right? That will all be great resistance levels to be a seller. In a bear market, I want to sell at resistance. I don't want to sell at support. And it looks like we're sitting right here at the prior week low, the big round number. That looks like we're comfortable here at support. So I'd like to get off of this support level up into a level of resistance so I can start looking for some selling opportunities. An easy way to do this would be a strong move up. The buyers try to buy the pullback. Buyers try to buy the pullback. The buyers fail on the pullback. Failure leads to strength. Strength leads to a pullback for the bears. And we make a run, right, back down to those lows, right? That's the bottom line, right? That's going to be the easiest stuff. Failure into strength, strength into pullback, right? And then pullback back down to retest the lows, right? We had some fun last night in the newsletter talking about this broken record, right? Because we keep saying that because it keeps working. Now, with that said, as we go, right, as we go higher, we know where we want to be looking for that sell. That's pretty easy. What if we start going sideways here? This is going to be a little more difficult, right? What if that prior week low really sucks us in, right? What if we get sucked in here, right, going sideways? What's the plan at that point now? Well, now the plan is whenever we have a range, we always want to look for the 2-try rule and failures. So think 2 tries. 1 try for the buyers, 2 try for the buyers. Once I see that second try for the buyers, I can now look for that failure going back down into that range. Looking for selling opportunities after a 2-try rule above the high of that range. And maybe we get a chance to use the top of that hidden channel, right, or the battle zone as resistance along with it tomorrow. Last but not least, well, maybe not last but not least, but next up, we know if price goes up. We know if price goes sideways. What if price goes lower? If price continues going lower, not much changes here. I now can move my battle zone down a little bit lower, but I still want to focus on selling high. Get up around those highs, wait for that pullback, right, and sell back down from there. So if we keep dropping here, if we keep grinding lower on our way down to that measured move and that big swing target at 59.60, 59.61 area, right, I just want to make sure I sell at resistance rather than selling at support. So I'm waiting for the pullback. Last but not least, how do we turn bullish? Yeah, good question, right? Strong move up, pull back to the moving average, strong move through. If I can get a strength, pullback strength, then I'm going to go out and grab that high, grab that low, and I'll look for what we call a hidden channel, right? Drawing off those highs, try to incorporate that moving average as it comes over. And again, that prior week close becomes an easy target waiting overhead. So really the only variable right now is how does the market react tomorrow morning? We get that big news at 8:30, right? And I got to be honest, all of my analysis tonight could be a waste of time because tomorrow morning the number could come out outside of expectations. This could just go bonkers, right, for a few minutes, and this could really shake things up. So I may need to do all of this over again tomorrow morning, and that's just part of the game when we have a big news event like NFP Friday coming tomorrow morning. So keep your eyes and ears open tomorrow morning. It's a bear market until proven otherwise, but the bulls definitely have a carrot at the end of the stick, right, for that prior week close if they can take control for tomorrow. Get the plan now for the oil. How about some S&P? S&P is bullish and trying to finish the measured move and possibly retest the prior week open tomorrow morning. The market is definitely bullish, but this is a good example of price being a little too close to the market's objective, which of course is this measured move, and that tells me this would be considered buying too high. So my plan is to now start looking for traps below prior swings, look for seller failures below the moving average, anything that allows me to either buy at support or catch the sellers on the wrong side of the market. Now, really, whenever I see a market whenever I see price, you can tell here, right? Big, strong move up, pulls back, you know where they're trying to go, right? They're trying to go channel rotation, and they're trying to go up to that measured move. The Nasdaq is a good example of what the S&P is trying to accomplish here for tomorrow. And I should also remind you as well, again, this is the 318 contract on the S&P. The 618 contract, we may be on the 618 contract as of later on tonight, tomorrow morning. So again, watch the total volume on the 618 contract. When that exceeds a total volume tomorrow on the 318 contract, then you know it's time to be trading that 618 contract. Again, if they're sharing volume tomorrow, if they were balanced, you could choose either one, but normally there'll be one that clearly takes over the volume, and you'll want to follow that one tomorrow. So long story short, assuming tomorrow is contract rollover, assuming we're trading on the 618 contract, unfortunately, I can't give you that chart right now because there's no volume on it yet. But again, tomorrow we may have to slightly adjust this stuff because it will be a different chart, but it should look very, very similar. And again, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we'll do it all with you guys tomorrow, right, in a hands-on environment. So you won't be doing it alone. So the bottom line, though, is anytime we have a strong trend, we know they're trying to get channel rotation and that measured move. The measured move is the next market objective. Okay, now, anytime I find myself in a position where the only option is to buy really close to that level of resistance, I don't want to buy into resistance. I want to buy at support. So I don't want to be buying here right now. I want to buy at support levels, such as the low of this channel, right? Buying off support below that channel. Buying using traps, right? Below the range there, below prior swings. Or, always one of my favorites, is looking for opportunities to catch the sellers, right? The counter trend traders on the wrong side of the market. And I kind of highlight these two areas because this is a great example of what happens in a real strong trend when the market goes below the moving average. You'll notice how, for example, the first example, we go down, right? The bears try to sell that pullback, they fail, and we go shooting back higher. Second example right here, we go below the moving average. The bears see this is their chance to reverse the trend. They try to reverse the trend, but as you can see, that was nothing more than a trap, and the buyers launched it higher. So I'd love to see another example of that tomorrow. That would allow me to buy at support, at the same time catching the sellers, the counter trend sellers, on the wrong side of the market. That will give me a distinct edge over those bears. If I can be a buyer when the sellers are getting stopped out, the sellers get stopped out, how? They become buyers. And if I can buy at support, by running the stops of the sellers, I've got the buyers buying at support, and I also have the sellers buying at support as well. If everybody's long, this market will shoot back up, right, and retest that high. So those are some definite things I'm looking for tomorrow. Now, we get the measured move waiting overhead. We know that's resistance. If we can punch through that, look what we got up here. There's the prior week open, 27.51.5. It's pretty much the only weekly level we have to really worry about right now on the E-mini S&P. So if we do push through the measured move, that prior week open definitely becomes an area of interest here for us tomorrow. So we don't want to buy high, we want to buy low. What if price goes up, down, or sideways? Well, again, I'd rather see us go down first. I'd rather see us take off the downside, tap some of these prior support levels, let buyers buy off support, sellers try to sell it at that moving average. They fail, failure leads to strength, strength into pullback, and pullback goes back up to retest that high. Failure leads to strength, strength leads to pullbacks, and pullbacks go back up to retest that high. That would be ideal for tomorrow, right? What if we end up kind of sitting up here at these highs, right? What if we end up sitting up here at these highs, right? We stop making higher highs, but all of a sudden the moving average flattens out, right? Moving average flattens out. We're getting this range-bound market up here. Probably not going to happen because we got some big news tomorrow morning, right? Might come after the news, right? But probably not going to be ahead of the news tomorrow. If we do get a range, if we do start seeing double tops here at that measured move, I'm thinking one try, I'm thinking two try, right? And I'm going to go back up into that range again. Anytime we have a trading range, I look for failures, and whenever I think failures, I think two try rule to go back up, right, and retest that high. What if we keep going higher here? Right? What if we keep going higher here? We keep going higher, we keep going higher. The only real problem is going to be, right, can we get above and hold above that measured move? Right? Can we get above and hold above that measured move? That will be a goal tomorrow. Can I get that moving average up above the measured move and then go looking for a possible triple measured move? You'll see an example of that in the Nasdaq in a few moments. Okay, that's an option for tomorrow. But you got to also be weary of those kind of box-in environments, right? Where you see something like this, where it pops up above the moving average or pops above the measured move, and then comes back down below it. You really got to be careful, right, buying into it. If that happens, we oftentimes get a trading range up here, and you want to focus on buying low, right? So if we do go higher and then we get sucked back below that measured move, don't just try to buy into the measured move. Either get back above it with the moving average above it, or look to buy below that range. And it will usually end up being either kind of a head and shoulders pattern or a trading range up there. And my focus will be to buy right below that low of that range. Last but not least, we know up, we know down, we know sideways. What if price reverses here tomorrow? How do we get a reversal? First thing, strength. Second thing, pullback to the moving average. Third thing, strength, right? If that happens, I'm going to try to line up those lows up to those highs and stay focused on selling up at resistance, right? It's a little bit tough when the market reverses, right? Because first, you don't trust it, right? You can't trust the market when it just pulls back off the high. Because how many times have we seen this week where the market pulls off the high, it goes a real strong move down, but then gets drawn right back up to the high again. So we can't just sell when the market moves lower, right? That's not enough. We also can't sell when it tests the moving average, right? Because look at all the times when the price goes below the moving average, tests the moving average, gets stuck right back up again. We have to wait until the market really shows us they've got some strength. Okay, that's the only real reliable way to do that. And then once we have that, it's too low to sell now. I don't want to sell down here. So what I'll do is I'll mark up those lows, create that hidden channel, and bingo, I got my spot there to picked out, right, for my sell here tomorrow. So nice big move up to the prior week open. Nice big move down to that 81.25. Again, tomorrow morning, big news at 8:30. And we're going to see if this chart can hold up tomorrow morning. We might be back at the drawing board after 8:30 tomorrow morning once that big news event comes out. How about some Nasdaq now? The Nasdaq is bullish, also ahead of contract rollover tomorrow. And they're going to spike in range pattern, trying to break higher to reach that 7,000 kind of big round number tomorrow morning. Okay, that's the prior month high up there, not as important as a prior week level. The Nasdaq not really dealing with any prior week levels right now, but that big round number, yeah, the prior month high is definitely something to consider, but we don't normally see the prior month high start acting like a magnet until the end of the month, right? It's like the end of the week. So big round number is definitely going to be the objective, but you can definitely see, though, there's really a couple of important things here. Most important thing, spike up, and you'll notice we pull back, we try to go higher, doesn't work, we pull back, we try to go higher, that doesn't work, we pull back, now we're trying again, right? What is this? It's a head and shoulder. Sorry, it's a trading range. It looks like an inverted head and shoulders, right? There's your shoulder, there's your head, right? There's your shoulder. It looks like an inverted head and shoulders, right? And as I mentioned earlier this week, I don't trade head and shoulders patterns because they're unreliable, right? This one doesn't look that bad, but we have a trading range instead. The range you can see here, I think, is the most important clue right now. Like I said earlier, the S&P is just a few inches away from this measured move. That's why I said look for traps, right? Look for traps. Look for those deep pullbacks down below the moving average. Look for a way to get in at support whenever you find yourself just a few inches away from that level of resistance. Then, of course, we also have the channel, right? This channel is a big important deal here because if we do go higher, the top of that channel now makes for an excellent long-term runner target, right? So if we can push through this measured move, the top of that channel makes for a great runner target here for tomorrow. Right, so we've got, of course, the prior month high, the big round number. Those are the objectives overhead along the top of that channel. Right, the measured move acts as major resistance. Right, and again, we have rising support, untested reversal lines, right, acting as support now. Most important thing is that channel, right? Strong move up, bull bias into a trading range. There are basically two easy ways to trade a spike and range. First of all, we know the market's bullish because of the bull move going into the range. The second thing is the best trades will always come down below the low of that range, right? And we look for the 2-try rule. I want to see it go once, don't try it there, wait again, 2 tries, and then up we go from there, right? Again, we call the 2-try rule. Look for that second try and buy that second try. From there, we then look for what we call the fake out, breakout, pullback. Moving average comes over, moving average must get out of that range. Then I look for a 2-legged pullback, right, to be a buyer using the top of that range combined with that moving average. The key is you want to look for that to be a 2-legged pullback, not just a single 1-leg pullback, right? Sometimes it puts you below the moving average to get that second leg lower. The reason why is just because most of the time when the market really jumps like this, it'll be too high to buy up there. You want to buy that breakout. You want to buy that pullback. And it's usually going to be that 2-legged pullback for that move going back up, right, to retest that high. So looking at a range failure below and a range continuation above, those will be the two plans here, right, for tomorrow. So we have our trading range. That's pretty simple, right? Let's go 1 try, let's go 2 try, and then back up, right? You can see it right here. 1 try, 2 try, back up in, right? Every time we move lower, 2-legged pullback, back up in, right? 2-legged pullback, back up in. I want to buy off that battle zone, right? Waiting below. What if price goes higher? Price goes higher, it definitely looks like it wants to right now. Strong move up, 2-legged pullback, right? And a buy from there. So if price goes sideways, well, heck, we're already going sideways here, right? We're already going sideways right now. Price pulls back, 1 try, 2 try, failure, back up into that range, right? Price goes higher here. Strong move up, get the moving average up. Don't buy high up here, right? Buy that 2-legged pullback, right, for that breakdown, right, as we go. How do we reverse tomorrow? Can we reverse? Oh, one more thing too. We got 1 leg, 2 legs, and yes, there's actually a triple measured move waiting up here. If this thing really gets a little cray-cray tomorrow morning, look for that 70.5 1/4, 70.51 1/4 area. That will be an easy long-term target, right? So if it does really start pushing tomorrow and you want to leave a runner, that measured move there at 70.51 is a great, tasty area, right, for a nice big target if we get that nice big bullish move tomorrow after the non-farm number comes out. Again, everything's pretty much up in the air right now. We have no idea what this number will look like tomorrow. We'll see, right? We'll know more tomorrow, 8:30 a.m. Eastern time. Now, how do we reverse? You got it. Strong trend down, strong move down, right? Strength, pullback. Yep, right? And strength, right? Strength, pullback, strength. Grab those lows, grab those highs. Bingo, right? Looking for that sell. Look at that sell off of that high. Goal will be obviously getting back down to that low, but in all reality, right, the goal for those bears, We'll be back down to that, just shy of that 6,800, right? Big round number down there for tomorrow on the Nasdaq. So buyers trying to get up to that big round number, up to possibly the next measured move overhead, right? Sellers would love to get down to that 6,800 tomorrow, but they got to get a heck of a lot of strength, though, to take control of this market. Now, over to the yellow metal, the gold futures. Gold is bearish with a spike in channel pattern, and that tells me to look for selling opportunities up off the highs of a channel tomorrow morning. I can also see the prior week closing price is just above me. So the plan is definitely to look for selling opportunities up at resistance, but I also need to keep an eye out for a possible trading range developing around the prior week close as well. If I zoom out on this chart, you can kind of see where I'm coming from, right, with this spike in channel. We had that really strong move down yesterday. If you recall, we had that trading range. My exact words last night on the newsletter were get above the top of that range to be a seller. That made it pretty easy for anybody who was waiting, right, for that trap high. Connect these lows, bring that up to those highs. That creates this spike in channel. You know, in all reality, you could shave off that high and just kind of draw the spike in channel like that. I wouldn't argue with you if you drew it like that, but, you know, typically, though, you're going to see folks use these 3 points to draw that spike in channel. So that's definitely going to be the spike in channel that I want to use here for tomorrow. With that, we also, of course, have some prior swings. Those prior swings, we got a rising support trend line here as well. And, of course, we get that prior week close. Spike in channel is the most important clue on the chart here right now. That tells me I know exactly where I want to be selling. I want to be selling up around that high. The only concern I have is this rising support trend line. A lot of times what happens is when you see a market bouncing off this support, we have to actually get through it and then use it as resistance. So that's going to be something to keep an eye on tomorrow morning as well. That prior week close isn't a huge deal right now, but if we see a market, for example, tomorrow morning go up and then come crashing back down after news and kind of settle in around that prior week close, you know what's going on. You know the bears and the bulls and bears, they're agreeing on value. They're comfortable around that prior week close, and so we'll use that as a magnet, almost like a trading range. So we know we're bearish right now. I want to sell high. We'll love to see us go up. Failure. And again, the concern I have is this rising support trend line, right? So up, right? Up, get below the trend line, try to use it, right, as resistance. Or if we go up and crash back down, that happens quite a bit, right? We got to watch out for that support level. I'll look for that trap high and just try to sell high as best I can here tomorrow, right? Again, I'm not going to have the luxury of being able to just sell into that trend line, right? Because that trend line will be sitting right there. So I'm going to want to get below it, pull back, right? And then go from there on the way back down to retest that low. What if we go sideways here? Definitely looks like we might see this thing go sideways here, right? If we go sideways, not a huge ordeal, right? 1 try, 2 try, failure, right? Sell. At that point, you don't need to worry about that trend line as much because it will have already proven to be a sideways range instead of a rising support trend line. So keep that in mind. And what if we keep going lower, right? What if we keep grinding lower? Again, we got big news tomorrow morning, right? What if we keep grinding lower? Same plan as it was for last night's newsletter, right? Find those prior swings, look for that trap, and sell that trap high. Back down we go again, right? Just don't sell at support, sell at resistance. Again, I know it's not like a broken record on this, but that's the easiest, most reliable game plan. And then this is gold. You know, tomorrow's non-farm payroll numbers have a big impact on gold. This could easily turn bullish. The first clue will be a real strong move higher. The second clue will then be a whole pullback. Right? Third clue will be a new higher high. If I can start seeing those new higher highs, that third clue, right? We now know, mark up that new channel, buy that pullback, right? And you're in like Flint, right? And of course, at that point now, the goal for these buyers is going to be, boy, all the way up to these highs up here. We get highs at 1342. And there's a little bit higher high up there. Where is it? All the way up there, right? 1342.9. So watch those areas for targets if the bulls, right, can take control of this market. And then last but not least here on the euro also is susceptible to a big move tomorrow morning because non-farm payrolls oftentimes affect the US dollar. And of course, what affects the dollar has a negative correlation to the mighty euro. Euro is definitely bearish with a strong spike lower to finish today's session. As I mentioned last night, we had the Draghi press conference this morning after 7:45 Eastern time, and it really did shake things up, and then pretty much sent the euro on kind of a death spiral, sleepwalking its way lower here today. So the bears definitely have control, but it's not giving me very much information. All we really have is a strong move down. So knowing this, I'm pretty much doing whatever I can do right now. I'm connecting the lows and then copying that up to the high to create a hidden channel. Right, that resistance area overhead will be hopefully a good spot for us to find some selling opportunities tomorrow morning. I also know that strong moves in one direction will usually be sold relatively aggressively when it pulls back to the moving average. So I'm not going to hold my breath to get up to that hidden channel. I may just get a pull back to the moving average. Maybe a little trap high there above that 23, 450 area, and then get that next leg lower. You can also see we have the prior week close and the prior week open pretty much right in the same spot here, right? I know that it isn't, if you think about it, right, how does that happen, right? How does last week's closing price, what does that really tell you? It tells you that last week pretty much did this, right? Last week opened up here, right? Maybe it went up, it went down, right? It went up, and then it pretty much closed right where it started. Right? Prior week open, prior week close, right? That's how that comes in, right? That's how a prior week close and a prior week open are right on top of each other. Okay, so if you look at this as a candlestick, right, it'd be a doji. Okay, it'd be a doji. What does that tell you? Think about what that tells you. It tells me that if we go lower here tomorrow, right, because of that news that comes out, don't be surprised if we end up back to this prior week area. All right, it's tough to predict right now because of that huge news coming out tomorrow morning. Right. But if this is kind of the body of our doji, right? If that's the body of our doji, this market runs lower. Don't be surprised if by the time we finish up the session tomorrow morning, we're bullish using this as a target. Okay, obviously that would require a big move down first, and we'll play that once we see that. So got to keep that in mind as well. So really the most important things right now, we know we're bearish. We have a strong spike down. That spike down will likely be sold on the next test of resistance, that resistance being the moving average or this prior swing. At the same time, just in case we don't get too aggressive on it, I'm lining up those lows. I've got that high, and that creates a level of resistance well overhead as well, right? So we have this whole area here. We're looking for a chance, right, for that resistance. So we already know that we got that's an option, right? Up at that level, up at that hidden channel, over at the moving average, failure, strength, pullback, right, going lower. I mean, that will be the easy part, right? That's the easy one. Up, failure, strength, pullback, back down to retest that low, right? That'll be the easy part if price goes higher. If price goes price goes sideways, get a bear bias. If we aren't making lower lows, right, we're going double bottom style now. One try, two try, back down in, right? Sell that second attempt, failure. Okay, again, don't try to buy the breakout. It's not bullish. It's a bear market, right? And don't try to fade the first one because the first one is usually bought as a pullback. Okay, fade the second one because the second one, everybody's already in that move. And if they're wrong, right, you'll be rewarded handsomely when they get stopped out and the price collapses back down again. Okay, the only question I have really is what if price goes lower, right? And this kind of reminds me of, kind of the four scenarios for a spike. Right, so how do we trade a spike? Kind of a spike strategy, right, if you will. The first one obviously would be a strong move down into a spike in channel, right? Spike in channel. This is the first, right, way to handle a spike, right? Keeps going lower. Then you've got a spike in wedge, right? Spike in wedges aren't that common, right? But we've seen a couple of them this week, right, on short-term time frames. Another one, of course, would be a spike in a range, right? Spike in a range. And the hardest one, definitely the rarest of all of them, is a spike. It's not a spike, it's a flag pattern, where we actually start going higher, right, with a channel. Okay, now these are all pretty simple. The bears have control. And anytime the bears have control, we want to sell high. And so really the plan here is to focus on the first one, spike and channel, right, up and back down from there. On a spike and wedge, same thing, up and back down from there. Spike and range, 2-try rule, 1 try, 2 try, back down from there. And a flag pattern will be above the top of that channel, right, and then back down from there as well. Or the pullback, the breakout pullback down off that low. Okay, we've talked about flag patterns many times before in this nightly newsletter. I'll put a link in the description, I'll put a card up top here. So look up top here in the video, and I'll put a card up there for a flag pattern. That way you can go watch that video as well, and you can see more about how we do that. Okay, so if the price keeps going lower, okay, look for that spike in channel, look for that spike in wedge, right? Look for that spike in range. And obviously, if the price goes lower, we won't be having a flag, right? But again, you guys have that video overhead, right, to watch that lesson. So the price keeps going lower, right? Again, I'm expecting once it gets back to that moving average, you're going to see a lot of sellers. Now, again, this may come, around the news tomorrow. So if it comes around news, don't go trying to sell during that news tomorrow. But I'm assuming we'll see some bears come back in there. Once that happens, then I've got my spike in channel. I can sell the top of that channel. Right, and of course, I can look for those sells, right, above with those traps, right? So those are going to be easy ways there as price goes lower here for tomorrow. Just simply focus on selling high, right? Don't sell low. That's an easy way to put the odds more on your side. And I'll tell you, if you just simply follow that rule of selling at resistance and buying at support, in a bull market, buy at support. In a bear market, sell at resistance. You're going to be so far ahead of the game. I know it seems very basic. And I know when I was a new trader, I assumed it had to be more complicated than that. But I'll tell you right now, the vast majority of mistakes I used to make and the mistakes that I see new traders making is just simply buying at resistance or buying at or selling at support. If you can just buy at support or sell at resistance following the trend, you'll remove 80-85% of your losses. And then that will allow you to keep the winners, and you'll be amazed how your confidence will be boosted by that, and you'll be following the plan in no time. So we'll talk more about that tomorrow morning in the trade room. In the meantime, though, we got not a lot to work with in this Euro chart, so we'd like to get some more information, but we definitely know the bears have control, and we definitely know, right, we want to be a seller. So buying and selling opportunities for tomorrow, but don't forget, we got rollover on the E-minis. We got non-farm payrolls at 8:30. Be careful around that news number. I'm doing my best right now to give you a good strategy for tomorrow, but again, as I mentioned earlier, this could go bonkers tomorrow morning, right? And these charts could be worthless tonight, and we may have to redo our strategy tomorrow if this thing really gets shaken up around that news tomorrow. So come out and join me tomorrow, 8 o'clock Eastern time in our trade room. We'll execute the strategy with all of our advanced members. Speaking of members, we have 3 levels of membership here at School of Trade: our beginner, intermediate, and advanced classes. And don't forget, if you want to learn all about our trading strategy, right, make sure you join that free trial on the homepage here at schooloftrade.com. I'll put links in the description of the YouTube video. And don't forget, any questions, you can always post those questions in the comment section in YouTube, or hit me up on live support on the right-hand side of my website and the right-hand side of my blog at Sideways Markets. Guys, that'll do it here for me this week. There is no newsletter on Friday afternoons. They do let me out of my cage every once in a while. I hope you guys learned a lot with the newsletter this week. I hope you use it to earn a lot tomorrow morning. Hope to see you tomorrow morning in the trade room as a brand new member. And as always, I'll see you guys next Monday. Remember, daylight savings time, right? Be well out there. Be nice to each other, will you? Enjoy the weekend. Enjoy the weekend. I'll see you tomorrow morning, and I'll see you guys next time. Adios, amigos. Bye-bye for now.